I've already included our templates to save us some time. Now on your right hand side, you will identify that I have included our T accounts. Now I want to indicate to you what do I mean with the word movement. Now guys, very important to remember, at the beginning of 20.13, we will only take into account our parents' balances. At the end of 20.13, we need to remember to add our subsidiary. Now, when you look at our receivables for 20.13, in the beginning, our opening balance, we have 70,000 that we need to include relating to our closing balance for 20.12 of our P Limited entity. Our closing balance for 20.13, when you look at the statement of financial position of P Limited, will be the 80,000 of P Limited plus the 40,000 of S Limited. Why? Because now we need to consolidate. Therefore, this will be the 80,000 plus the 40,000, and our closing balance will be 120,000. But what we need to remember is that we've purchased the subsidiary during 20.13. Therefore, due to the fact that we have a subsidiary now, from a group's point of view, we consolidate. Therefore, we need to add plus subsidiary 40,000, and this is the 40,000 receivables balance in our statement of financial position. Now we are able to identify what is the balancing figure in our trade receivables. Therefore, when you add the credit side of our receivables for 20.13, the total will be 120,000. Our debit side will be 110,000. Therefore, we still have to include bank to the value of 10,000. Now, when you think about this transaction, debit our trade receivables, credit our bank with 10,000. Therefore, our bank account decrease. Now, when you refer to the receivables for 20.14, guys, opening balance is the closing balance from our prior year, 120,000. Our closing balance for 20.14 will be our 90,000 from P plus the 55,000 from S, and the total will be 145,000. Now, when you have to balance your T account, on your credit side 145,000, debit side 120,000, therefore you will still have to include a line item relating to your bank, and this will be 25,000. If you think about your journal entry, you will have to debit your trade receivables, credit your bank account with a 25,000, a decrease in your trade receivables. We can now move on to our payables. Opening balance of our payables will only be P Limited. Payables increase on the credit side, decrease on the debit side, therefore 50,000. Opening balance 50,000, and our closing balance will include P and S 68,000 plus the 30,000 relating to S, and our closing balance will be 98,000. Then important to remember, we've purchased the subsidiary, therefore increase on the credit side of 30,000, and we can now balance this account. On our credit side we have 80,000, on our debit side 98,000, and we can include on our credit side our bank line item 18,000. We credit our creditors, guys, we debit our bank account, we credit the trade payables. When we debit our bank account increase. Now guys, exactly the same with 20.14. Therefore 20.14 on your credit side, you need to include your bank to the value of 25,000. Now we can move on to our PPE. PPE for 20.13, our opening balance is only P, 200,000. Our closing balance will be P, the 250,000 plus 80,000 relating to our subsidiary. We've purchased the subsidiary, therefore increase in our PPE to the value of 80,000, and we can include our balancing figure on our debit side. Bank 50,000, therefore think about your journal entry. Debit your PPE, credit your bank account with a 50,000. And you can complete your PPET account for 20.14 as well. On your right hand side, you will identify that I've included our cash flow statement. Now our cash flow statement divided into the three: cash flow from operating activities, from our investment activities, and from our financing activities. When we look at our operating activities, you need to remember that this relates to our profit and loss as well as our working capital. When we look at our investing activities, this relates to our assets on our statement of financial position. And when we look at our cash flow from financing activities, to our equity and liabilities, but not our trade payables. Remember guys, the trade payables is our working capital. And when you think about our income tax will be included in our operating activities calculation. Therefore, all of our other long-term liabilities. Now, our first step, we need to start at the top and calculate our cash flow from our operating activities. Now, when you look at our calculations at the bottom of your right hand corner, you will identify that we do not have all of the information relating to the items that is non-cash and our items that need to be separately disclosed. But we do have the profit for the year that we need to take into account. Remember, how do we calculate profit? This will be your opening balance of your retained earnings recon to your closing balance. Remember, for 2013, we only had profit of P Limited. Therefore, the difference between the opening and closing balance of our retained earnings will be a total of 130,000. Now, when we look at 20.14, our opening balance will include P and S, and our closing balance will include P and S. Therefore, if you look at 20.13 to 14 balances, guys, this will be the difference between the 350,000 and the 150,000, and this will be a value of 200,000 for P. When we look at S, this will be the movement between the 110,000 and our 60,000, and this will be a total of 50,000. Therefore, our total retained earnings movement, which will be our profit for 20.14, will be 250,000. And this is what we include in our cash flow from operating activities: 250,000 for 20.14 and 130,000 for 20.13. Now guys, remember, we need to take into account the movement in our working capital. There's an increase in our receivables. When you look at your T account on your left hand side, for 20.13, our receivables increased. Now, due to the fact that our receivables increased, our bank account decreases. For 20.14, increase in our receivables, credit bank account decrease with 25,000. Therefore, in your calculation, you will identify that we need to include our brackets. It's an increase in the receivables, but guys, this increase in our receivables will result in a decrease in our bank. Therefore, you need to remember your brackets. When you look at our payables T account, our payables increase on the credit side, and this will result in a debit increase in our bank. Therefore, we need to include a positive 18,000 for 20.13. Now, when you look at 20.14, our payables increase. Therefore, our bank account will be debited with 25,000. Now, our total of our cash flow from operating activities, 138,000 and 250,000, and you can transfer this to your cash flow statement. Now let's move on to our cash flows from investing activities. Now, important, from investing activities, immediately you need to think about our subsidiary. Remember, I've indicated to you payment 88,000 minus the 20,000 that's included in our bank account. Now, remember, when you look at your statement of financial position, the other assets that we have is our property, plant, and equipment. We've calculated the movement, and when you look at your T account on your left-hand side, guys, for 20.13, you will identify that we've debited PPE, therefore increase in PPE, but this will be a decrease in our bank. Acquisitions of property, plant, and equipment, the same with 20.14. Therefore, you will identify in your cash flow statement a decrease of 50,000 for 2013 and 190,000 for 20.14. Now, our net increase in our cash and cash equivalents for 20.13 is 20,000 and 20.14, 60,000. We now need to include our opening balance of our cash and cash equivalents. Now, at the beginning of the year, for 20.13, we only had P Limited. When you look at your statement of financial position, you will identify the cash amount of P Limited at the beginning of 20.13 is an amount of 50,000. Our closing balance is 70,000. Now, this will be the 50,000 of P plus 20,000 of S. Now, what is important to identify, at the end of the year, we add the bank account to 20,000. But in your line item, obtaining control of a subsidiary, remember we've deducted the 20,000. Therefore, the net effect is still 0. Now, your opening balance of 20.14 is an amount of 70,000. Your closing balance, you need to add, guys, important, you need to add your subsidiary and parent at the end of the year is 130,000. Then you had to remember that we have obtained a subsidiary, therefore we need to include our note. Now, guys, normally in the note, you will have to add and indicate that the subsidiary was obtained on 31 December 20.13, and then you need to include, and this is the important section, guys, you will have to include of all of the assets and liabilities, the portion such as the 80,000, 40,000, 30,000, 20,000, and so forth that we have now included in our group cash flow statement. And you need to calculate your NCI's portion as well. Now, this is your statement of cash flow. Guys, it's not that difficult. it can become very complicated depending on the amount of information included. But when you follow your structure and you identify increases, decreases, you should be able to do this. There's quite a lot of easy marks in a cash flow statement. Cash flows arise from changes in owner's equity that do not result in a loss of control. Now, important, they indicate to us that when we have a change in our owner's equity, where a subsidiary remains a subsidiary. Remember that we indicate that this is an equity transaction, and in our statement of changes in equity, we add an additional column relating to changes in owner's equity. Now, the standard indicates to us that cash flows arising from these transactions should be included in our financing activities. Now, remember, on your cash flow statement, we have the three categories. Number one, our operating activities. Number two, our investing activities. And number three, our financing activities. Now, they indicate to us if there is cash flows that arise from changes in owner's equity, that we need to include this in our financing activities. And that you need to remember that this is an equity transaction. Now, a few sundry aspects that you need to remember. Interest and dividends should be separately disclosed, received as well as paid. Each shall be classified in a consistent manner from period to period as either operating, investing, or financing activities. Therefore, you need to please read the information provided. If they don't indicate anything, you know that this should be disclosed in your operating activities. But when they specifically indicate to you dividends or interest relates to on investing or financing activities, you need to disclose this separately in either investing or financing activities. Then income taxes. Now, important, when you think about IAS 12, remember IAS 12 indicates to us that our income tax is current tax as well as our deferred tax. But remember, deferred tax is not cash. This will not influence our cash flow. Now, when you need to calculate the movement, guys, in your income taxes, therefore income taxes being paid, you have three accounts that you need to think about. The first one will be your actual such payable account, the liability, where you need to include opening balance as well as closing balance, and then your tax for the year as per your profit and loss statement. Then you need to think about your income tax amount as per your profit and loss, and you need to identify your deferred tax movement. Now, it is important that you take out your deferred tax movement because your deferred tax is not a cash item. Now, they indicate to us that income taxes shall be classified as cash flows from operating activities unless they can be specifically identified with financing and investing activities. Therefore, again, you need to read the information provided. Then number 3, foreign currency cash flows. Now, you will remember when we refer to foreign currency cash flows, there can be one, either purchases or sales to foreign entities. Therefore, this will be a sale or a purchase transaction to a foreign entity, and we will have a foreign creditor or debtor on our records. Or there can be a foreign operation being our subsidiary in our group that we need to consolidate, and this is where we need to apply IAS 21, and we will have an FCTR account. Now, the standard indicates to us that cash flows arising from transactions in a foreign currency shall be recorded in an entity's functional currency by applying the foreign currency amount to the exchange rate between the functional currency and foreign currency at the date of the cash flow. Therefore, at the transaction date, guys, you need to translate this to Rand value if we need to prepare our entity in Rand. Cash flows of a foreign subsidiary shall be translated at the exchange rates between the functional currency and the foreign currency at the dates of cash flows. Now, finance leases. Remember, finance leases, if we need to recognize the transaction for our lessee has to recognize, one, the right of use of an asset, and two, the lease liability. Now, a capital portion, which will be the repayment of the loan, will be included in our financing activities. The interest portion that will be in other interest cash flows will be operating activities. Now, when we look at our discontinued operations, and remember, this will link to IFRS 5 for our level 2 students. When we look at our discontinued operations, there's two options. Option number one, when you identify in a given scenario that there is a discontinued operation, for your cash flow statement, you can include columns. You can include your continued operation and number two, your discontinued operation, and then you will have your total. Or option number two, you can complete your statement of cash flow and then include a note relating to your discontinued operation with all of the details similar to your cash flow statement relating to your discontinued operation. Now, a few important things that you need to remember when you attempt a cash flow statement question. You need to ensure that you know your structure of your cash flow statement and that you are able to quickly set it out in a question, your direct and your indirect method. Now, guys, please ensure that you refer to the illustrative examples relating IAS 7. Don't look at the page numbers. Remember, the page numbers can differ depending on the version that you have. Now, this will be included in your book B2. You need to complete the statement as you do the calculations. Now, remember, I've indicated to you your first step, include your templates. Then start with your T accounts. As you complete a T account, guys, you can transfer the amount either to your note or to your cash flow statement, and at the end, ensure that you have performed the requirement. If you do not transfer your amounts, your cash flow statement will not be marked. Remember this, guys. Therefore, you have two options. You can either, one, complete all of your T accounts. Two, as you complete a T account, immediately transfer the amount to the relative or relevant space. Remember, important, correctly classify your cash flows as either operating, investing, or financing activities. Make sure that your calculations are properly referenced. Very important, ensure that you understand your science, and you need to have a plan, guys. Guys, I have indicated this to you numerous times. You need to plan how you're going to attempt your questions. Okay, and then when you work with cash flow statements, you need to think about the cash. You are busy with a reconciliation about the bank account opening balance to closing balance. ensure that you have reconciled every statement of financial position account to ensure that your cash flow statement is complete. Don't forget about possibility of acquisition or disposal of subsidiaries and to include the note. Therefore, guys, please refer to your IAS 7. There is a few small paragraphs relating to these notes. The main thing, if there is an acquisition, you need to indicate acquisition of the subsidiary. You need to provide the details relating to this. And then you need to include assets, liability, equity, and the NCI's portion, as well as the consideration. If there is a disposal, you need to include your details as well and include all of the relevant information. In cash flow statement questions, there's quite a lot of easy marks that you need to obtain. Therefore, you need to practice sufficient questions to ensure that you score all of the relevant marks. Now, I'm not going to work through the revision page with you. Guys, the revision page, you can work through this on your own. All of the information we have worked through during this lecture.